All right, here we are, folks. We've got part two of an epic two-part video series with Kieran Davis here, who did a podcast with me. We did a breakdown of his full-on trading strategy in the first part, which you can go and see at the end of this video, or I'll put a link below this one as well. This is part two, where he's going to show us a 1 to 250% trade. Kieran, welcome back to the show.
Hey, thank you, man. I'm really excited to be back, man.
Cool. Well, look, let's jump into this video and, jump into TradingView and let's have a look through the trade that you're going to show us.
Yeah, sure.
Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With CTI, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
So when it comes to this trade now, I know there can be a lot of skepticism when you hear, 1 to 250 risk to rewards, especially when the industry standard is 1-to-1s, all right? Most I've seen some traders do less than that. But I want you to understand, guys, that this didn't come easy. This takes a lot of refinement, a lot of practice, and a lot of back testing, and a lot of pain to get there, if I'm being honest with you. So before I actually get into the actual strategy, I'm going to show you the screenshot with the exact timestamps. You can see this was taken on the 6th of March at 4:45 p.m. GMT UK time if you want to go back and backtest this. Now, again, I did have two entries on here, so I was willing to take the loss at this area here if it would stop me out. But in this case, it didn't. And that's a very important thing, knowing how to take losses and emotionally accepting them. So let's really break down this strategy. We're going to go from the daily time frame all the way down to the lowest time frame we can if TradingView lets us. And let's really get into this. So starting off on our higher time frames, right? I understand what Bitcoin is actually doing. So this was taken on BTC USD. Where we are on Bitcoin, if we look on the super higher time frames, we're in an absolute mega cycle for Bitcoin, right? I'm targeting Bitcoin to hit $378,000 by the end of this year. Past profits don't guarantee future results. But if we actually understand that mega cycle, the lower time frames now should be able to present nice re-entry opportunities. So most of the analysis with this was started off on the daily time frame. So if we look on the daily time frame, what can we start to see? We can actually see, and I want you to know that the devil is in the detail. We can see that we had this level, these equal lows being formed in the market. Now, most retail traders now, they would have put their stop losses just below here. But notice what happened after this. Price actually came down. It yanks all of these traders out and then continues to go higher. So what we have here is a reaccumulation phase in the market. We have a manipulation of our lows followed by a break of structure to our upside. So what we can start to do now is scale in. You see, if we start to refine we firstly have our daily level of demand now. This is our area where our institutions had to come back and mitigate. Now, again, you can enter on the daily time frame if you want to. However, if I'm being real, the stop loss is not the best. So what I like to do is I like to get swing trades with a scalp entry. So what we can start to do now, we can understand that our daily time frame is now bullish. If we start to look on our 4-hour time frame, again, this takes a lot of patience. We have to wait for our 4-hour time frame to flip alongside with us. We want to make sure our time frames are in alignment with what we're actually doing. So one thing I like to do with my top-down analysis is I actually like to mark up my different time frames. We understand that our weekly is up. We understand that our daily is up. Now, we can now start to break in. How do I know it's up? By looking at market structure, right? We all understand market structure. Cam's got some great videos on that. So if we actually start to look at our 4-hour structure now, what do we have? We had a low, we had a high, we had a lower high, and a lower low. At this point, we was in bearish structure. We can see what happens now is we have a bullish break of structure. We have price violate any previous supply. So this is now showing us that our 4-hour time frame is now bullish. So now that our 4-hour time frame is up, we can now start to scale in. Now, notice what we have. We have this gray zone, which is our daily level of demand, right? If we go back to our daily, that's our daily demand zone. If we zoom in our 4-hour, we can actually start to refine this demand zone. And we can actually start to see within our daily demand zone, we actually have a 4-hour demand zone here as well. So what I'm actually going to do is I'm just going to delete the daily demand because we can see we have a refined level here. Now, why is this a demand zone? This is what we call a rally-based rally formation. So what we can start to see now is our 4-hour is in alignment. But now all of our lower time frames, because as price is obviously going up on the 4-hour, right? On our lower time frames, we're going to have a downtrend. Price is going to be trading to the downside. So what we need to wait now is for these lower time frames to flip so we can go ahead and get these entries. If we start to see now on our hourly time frame, we can see our hourly structure as well, right? We have price growing low, lower high, lower low, lower high, lower low, higher high. We have a bullish break of structure. This is our structure break. So now we have our bullish break of structure. Where is price going to be coming back to? It's going to be coming back to our prior demand zones. Notice what we have. We have this last sell before we buy movement. This was the institutional candle that induced the demand in the market, right? It took out liquidity, it took out people's stop losses, and it led to that break of structure. So we can now use this as a potential area of demand. Now, for me, it's not so much the demand zone that's important, it's more so what happens in the demand zone. So now we understand that our weekly is up, our daily is up, our 4-hour is also up, and our hourly time frame is also to the upside. If we now go to our 50-minute time frame, we can see the same thing as well, right? Low, lower high, lower low, break of structure, pull back, higher high. This is our trading range which we're dealing in. So,
hey, want to trade crypto and gold like the institutions? Well, you can, and it's free for 14 days with Sage Strategies, fully automated trading strategies. Check out their live track records for 25 unique strategies, plus they host everything for you, which is perfect for beginners to advanced traders or investors. Simply sign up for their 14-day free trial today to experience it for yourself.
now we're in our trading range. Now we actually have this demand zone. We can also start to refine this now to our 15-minute institutional candle as well. So because we've now refined it, I can delete the hourly time frame. So now we have this demand zone. Now, again, if you want, you can enter the trade here. You can enter it like that. However, for me, that's still a little bit too low probability. I like to have as much confluence as I can get, if I'm being honest with you. So what happens next? If we now go down to, I hope trading view lets me go to the 3-minute. Yes, it does. Now, again, this trade was executed on the hourly time frame. You can see I've changed my colors since, but this was on the 6th of March, again, 4:45. And what did we have here? We had a Wyckoff accumulation model, right? We had our preliminary supply. What's happening here? Price is coming in and is testing any demand. We're seeing small signs of demand enter the market. Price now comes in. We have a secondary preliminary supply. Price now puts in what we call a seller's climax. This is where we're seeing the real bit of demand get into the market. Followed by this, we have something called an automatic reaction, which is where you're having that, again, the demand's entered, it's being tested, and we're seeing evidence of that demand come into the market. We have now what we call a secondary test in phase B. This secondary test in phase B is designed to shake out as many traders as possible. Because remember, what's happening here is people are making rational decisions to put their stop losses below here and buy for any point. They've got their stop losses below all these lows. So what's happening is price is shaking out all of these people, shaking out the weak-handed buyers. So the bigger institutions at play can accumulate their orders. What happens now? We see our evidence of demand. We break out of our trading range. This was our last area where supply was induced, right? So there were sellers living in this area. But notice what happens. Price comes up, it breaks that level of supply. So this has given us evidence that there is no more sellers left in the market. How do you know? Well, simply because the market was here, it literally went lower, right? So there had to be more supply than demand. There had to be more sellers live in this area. So by this, what we call bullish break of structure, this is showing us evidence that the buyers are now in control. Now, remember, it's not about one time frame. It's about looking at all of them. We had our weekly time frame that was up, our daily time frame that was up, our 4-hour time frame that was up. So our 15-minute time frame was bullish. And now finally, our 1-minute time frame has finally flipped. You can see this takes a lot of patience to get any trades. So when it comes to this specific trade now, we had 2 entries. The first entry was here and the second entry was here. Why? Because these were the areas where demand was introduced. You see, I was happy to take a risk here and take risk here as well. You see, one thing you got to understand is you need to be okay with losing trades. It's okay to lose. And this was calculated risk. Because the risk reward was so large on this trade and we had such large targets, again, I was happy to take a small loss here if it lost and re-enter the market here. We can see, obviously, if we actually replay the market, again, TradingView is not letting me go back to the 1 minute. But on the 3-minute, we can see very similarly, this was that area, right? This was that area where, let me just make the background a little bit more. Here we go. We can see this was our area here where we simply entered, right? Stops just below the low, stops just below the low. And now where are our targets? Oops, move that there. Where are our targets? So we have our scalp entry. Now, when it comes to our targets, we can have our swing targets. You see, when it comes to our targets, what were some of our targets? Our first target was hit. This level of liquidity is equal highs. Right? Stop losses above there. First target sitting at a 1 to 21. But again, we've got all our timeframes in alignment, so we can have those much bigger targets. Our final target was literally just based off our daily measured move. So if we actually take this impulse here, our next move should be very, very similar. Now we can see this is our next move from this low, and this gives us a price point of, let me smooth the zoom camera, of 58,000. Now, if I'm going to be honest with you, the main target for this trade was actually at $65,000. Why was it at $65,000? $65,000. Yeah, round number, institutional level, and what we call another extension, which I can't get into today. And now if we actually drag this all the way up to our final target.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com or there is a link in the description.
And then from here, we can see that our price, if we go back to our lower time frame to see obviously where it was, we can obviously see our stop loss was not invalidated. It managed to hold. And then from there, price literally just did its thing. And at this point, it's just about having patience and really just trusting in your analysis, man, because a lot of traders can be very impatient. It's just understanding the true ebbs and flows of the market. And then from there, it started to rally, and it was just having that final patience to hold for the rest of your swing. And then we can finally see if we try price back to normal. There we go. Our target was achieved of a 1 to 250 risk reward ratio.
Awesome. Great little breakdown there. And I hope you guys watching did pick up the, I suppose, correlations between your first video and this chart analysis as well. So Kieran, thank you very much for coming on the show again and sharing that with us. What's the best way for the guys to get hold of you?
Yeah, so either on my Instagram or my YouTube channel. My YouTube channel is Master of Coin. My Instagram is instagram.com/IK Davis.
Brilliant. Well, look, guys, do remember we had the first part of the video that you're going to get a link to either below this or at the end of the video. And also do check out the podcast we shot as well, where Kieran drops a whole bunch of value bombs in there, including things like the Devil's Advocate exit and what was the teachability index as well. So crazy little things like that. And I think about 7 or 8 different mindset questions you should be asking yourself as well. So guys, you've got to go and check that out. And do remember, hit subscribe, hit like, and click on the notifications bell and click all to get future videos like this coming up here on Trading Nut.